Okay, so let's start with our next topic. I hope till now you are getting all the topics, or you are understanding all the topics very well. See, this is again, I want to give this disclaimer. This is just a revision batch. Don't think as based on this revision batch you are going to clear the exam. If you have already taken the regular batch and then you are looking at the revision session, then only it is helpful to clear the exam. This is the disclaimer which again and again I'm giving you in each and every session. Okay, so after appearing in the exam, if you don't clear, don't blame on me that even after looking at the revision we didn't clear. But if you have seen the regular lecture, then it is for sure you will clear the exam based on these revisions, based on the mocks which you will be performing. Okay, so let's start with the next topic, that is, so deduction from the adjusted gross income is something which comes below the line. Above the line we have already seen what all adjustments which we can make. Below the line, the main adjustment is standard and itemized deduction. Standard deduction we have already seen in our first day session. If you guys remember, standard deduction, we saw that depending on the filing status, there will be certain filing criteria where we saw $12,950, $25,900, right? $19,400 for HOH. All those are standard deduction, means flat this much deduction so you are going to get. But if you have a higher amount of itemized deduction, you will be opting for an itemized deduction. You cannot go for both the deductions together. Either you can go for itemized deduction or you can go for the standard deduction. Okay, then we have a medical and the dental expenses. When you are going to incur certain medical expenses, actually this medical and dental are your personal expenses. If you are incurring any personal expenses that are not allowed in your tax return, but the IRS has given this liberty because in US those expenses are a very higher as compared to other countries. Okay, so medical and dental expenses goes on a very higher level over there. Okay, so that's why they have given a liberty that medical dental expense which you are going to incur, you can get a deduction for that expense which will be limited to certain percentage. If you guys remember what is the limit for medical and dental expense, please mention in the chat box. Up to what percentage you can take the medical and dental deduction. Next is taxes paid. First I want to know this answer, guys. See, I know half of the people are sleeping in this session. I know you are going to get the recorded lectures later on. All the recorded sessions are uploaded on YouTube. But why you are wasting time if your mind is not active in this session? Please watch this lecture very actively, very concentration, with your fullest concentration, and keep your regular book along with you. I'm not talking about the summary book only. Keep your notes. Keep your previous regular book from which you have done the regular batch along with you. Mark certain shortcuts over there in the book. Then only this revision batch is useful, because I can see some people are having exams on 12th October, 13th October. Now you don't have time at all to go and revise it again. Watch the video and revise it. But when you do this marking in the first reading only, this first revision, it will be helpful in the next revision. You know, in YouTube there is one option that you can increase the speed by 1.75 by 2.0, right? So you can increase the speed and watch the revision lectures later on, but the marking you should do it right now only, what I am asking you to do. Okay, so standard deduction, itemized deduction. Next is medical expense deduction. Only two people knows the answer, right? Rushan and Vinitha only knows the answers, that it is 7.5%. What about others? Sandeep, you were there in the class. Hina, you were also there in the class. You don't know what's the answer? 7.5% of what? AGI. Up to that much will be reduced. It was a reverse thing which we have seen, that whatever is your medical expense minus 7.5% of the AGI, whatever is the amount, only that much will be allowed as a deduction. Right. Next is taxes paid. If you are paid state taxes, general and local sales taxes, okay, up to $10,000 was the limit for this. Right. Interest paid. If you are paid any interest expense, that is for mortgage. Mortgage interest, if you have paid, you will be receiving 1098. Okay, form 1098. If you have received from the bank or financial institution, you will take a straight away deduction for whatever mortgage you have paid. Gift to charity, charitable contribution, we will see that there are certain limits, that if you are going to make this charity to a qualified organization, Okay, that is 50% limit organization or other than 50% limit organization. Based on that, the limit will keep on changing. Okay, then we have casualty and theft loss. We'll see there is a different formula, and the last one is about qualified business income deduction. Okay, so let's start about the standard deduction. This I'm not going to take this thing again. This is already done in the first day on the first topic. Basic standard deduction is 12,950, 19,400, 25,900, right? Additional standard deduction, if you are a blind or if your age is more than 75 years, then the additional standard deduction which you are going to get is 1,400 and 1,750. Apart from this three deduction, 1,400 is for all taxpayers, and for single and the HOH it is 1,750. Qualified disaster recovery loss. Let's say if you if your house or if something which is federally which is lost, and that loss is done due to federally declared disasters. Okay, and even if you have opted schedule A, or if you have not opted schedule A and loss is more than 500, up to $500, you can take it as a standard deduction for federally declared disaster. Okay, if you are going to claim a dependent, then we have already seen the dependent deductions, that earned, net earned income, KD tax topic. Okay, revisit that video again if you want to see it later on. Okay, then we have additional deduction for charitable contribution. Till 2020 it was allowed, but for 2022 no additional deduction for the charitable contribution is allowed. Okay, this was about the standard deduction. Now let's understand about the itemized deduction. Okay, for itemized deduction, we will see that this few categories we are going to understand. First is medical expense, then taxes if you have paid, interest expense, charitable contribution, casualty, theft loss, and any other deduction which is called as miscellaneous itemized deduction. First one is medical expense. From whom? For whom you are incurring the medical expense. For the taxpayer, spouse, dependent, it will be allowed as a medical expense as a deduction. For the purpose of medical expense, the definition of dependent will be different. Here the definition of dependent will be changed. Even if you are providing the medical expense for a person who is the dependent, even if he is earning the gross income of more than 4,400, then also it is allowed. Or if he is filing a MFJ return with any other taxpayer, then also it is allowed. Or if your spouse is claimed as a dependent on others' tax return, if your taxpayer spouse is claimed as a dependent. Do you remember these were three exceptions, that if these three are there, then in that case you cannot claim the person as a dependent. But for paying the medical expenses, you can easily pay the medical expense for this, even this 3%, and can claim that medical expense as a deduction. When it is to be paid, it has to be paid or incurred, not deducted for paid in advance. See, if you have paid the amount in advance, but the amount like it will be taken in the next year, so deduction will be allowed only in the year you have paid. Also, you have taken the benefit in the same year. If you guys remember this example, I have explained you in the class that let's say 31st December is there, medical expenses are incurred before 31st December, but let's say you are paying it on 1st of Jan. So in current year, you cannot take this deduction. It has to be paid or incurred in the same year only. And vice versa case can happen if you have paid it earlier, but the expenses are accrued in the next year, right? So in next year, you are going to take that deduction. It has to be paid plus accrued in the same year. How much you are going to take? Whatever is the qualified medical expense. Let's say against that you have received certain insurance reimbursement, right? So you are going to reduce that insurance reimbursement. Whatever is the qualified medical expense paid, you will get this amount. You are going to reduce 7.5% of AGI. So this is the limit which is not going to change each year. You have to remember this limit. Okay, so 7.5% of the AGI you are going to reduce from the qualified medical expense. Whatever is the remaining will be allowed as a deduction on your schedule A. Okay, what are the qualified medical expense? That can be dental, medical insurance, insurance premium, doctor prescription, insulins, diagnostic test, nursing. So whatever expense you have incurred now for the care and for improving the health. Okay, only those things will be called as your medical expenses, qualified medical expense. It has to be diagnostic related. It has to be medical related. Medical insurance will also be allowed. Insurance premium which you are paying is also allowed as a deduction on your schedule A. Any doctor related prescriptions will be allowed, right? weight loss programs for specific disease, okay, will be allowed only just for the sake of doing, for a better health. If you're taking certain medicines, if you're doing a weight loss program, that thing is not allowed. If it is curing certain diseases, then only it is allowed. Okay, next is meals and lodging expense. Meals and lodging means what? If a person is hospitalized, right? So in hospital, they have to consume the meals which is provided, which has been provided in the hospital itself. So that time what will happen is, expense up to $50 is allowed for meals and lodging. Okay, and if someone is traveling along with that patient, then $100 is allowed. Got it, guys? Any question? In our revision batch, we are not going to entertain any question. Apart from that, our regular batch, if you guys have any question in any topic, please feel free to WhatsApp me any questions. Okay, so remember that in case of medical expense, you have to remember the limit. Meals and lodging expense will be allowed up to $50. Okay, other expenses like transportation expense will be allowed only up to the medical facility, right? Transport facility, it will be allowed. The standard mileage for the medical facility is same, 18 miles and 22 cents, sorry, 18 cent and 22 cent for the first half and for the next half. Okay, this one is important, guys. Just a minute. Okay, so this one is important, guys. Due to some medical facility, see what happens now. Due to certain patients' medical facility, we have to install certain equipments in the house, right? So that equipment, if it is increasing the fair market value of the house, right? So we are going to consider it as a medical expense, and we are not going to take any FMV increase. So let's read it. Capital expense for special equipment installed at home. The main purpose is for medical care. Okay, you should not increase the value of your home. The home basis will not be included, means it will not be capitalized, but that expense which you are incurring will be considered as a Schedule A expense, as a medical expense. Okay, if you will see in the gains and losses chapter, whenever there is an addition in the house, we are going to add it to the cost basis, right? But here is an exception. If it's for medical purpose, it is for curing of a particular disease or something, and if you have installed certain equipments in the house for medical purpose. Okay, let's say person is a handicapped, for traveling from the ground floor to first floor, we have installed particular automated escalators, right? So that thing increases the value of the house. That doesn't mean you need to increase the cost basis of the house. Okay, it will be added to the Schedule A as a medical expense, but the maximum medical expense which you can get is up to your qualified medical expense, means whatever installation charges, whatever amount you have taken, whatever expenses you have incurred, you are going to reduce 7.5% of the EGI. Only remaining amount will be allowed as a medical expense on your Schedule A. Non-deductible, this thing you have to by heart, learn by heart, like learn as if each and every line item you have to remember, because in exam they will give you certain list in which this item will be mentioned. You have to figure out how much medical expense will be allowed and how much will be not allowed. So that is the diet, food, if it is not curing any disease. Cosmetic surgery, right? If it is curing a particular part of your body, or due to accident you have to go through the surgery, then it is allowed. But apart from that, you are doing just like that, a cosmetic surgery, that will not be allowed. Insurance, life insurance or income protection policy. I am talking about life insurance. Here, whatever insurance policies are there, now this insurance, this is for medical insurance. Okay, life insurance premium if you are paying, it is not allowed as a deduction on Schedule A. Medicare taxes, right? Medicare taxes, do you remember on your W2 there will be Medicare taxes. That doesn't mean that Medicare taxes is your Schedule A item. Okay, Nursing for healthy baby. Nursing is not your medical expense. Illegal operations or the drugs is not allowed. Imported drugs not approved by US FDA, right? Then we have travel for rest or change, just for relieving the stress. The doctor advise you to travel to some other country, to some other place. That travel expense doesn't mean a medical expense. It's just for your sake of your health, but it still will not be considered. The travel expense will still not be considered for a medical expense. See, don't confuse between this transport. Okay, transportation means what you are transporting from your home to the medical facility. That thing is allowed. Okay, next is funeral, burial, ceremoniation cost. All these things are not allowed. Why? Because when we are going to see the final descendants tax return, estate tax return, okay, over there we'll see that this all expenses are allowed over there. So that's why right now in Schedule A, it will not be allowed on the 1040 return of a person who is dying. Okay, for that we are going to file a 1040 final return. In that final return, this all cost will not be added, but it will be included for the, when the beneficiary or let's say the estate return has been filed, all these costs will be taken as a deduction. Okay, so this was about the medical expense. Next is our taxes paid. Taxes paid will be deductible maximum up to 10,000. Okay, and for MFS it is maximum 5,000. Now what all parts will be deducted in taxes? Any real estate taxes which you are paying. Okay, if it's your own home, on home, if you are paying a rental taxes, real estate taxes, it will be allowed as a deduction when paid or when incurred. Okay, taxpayer legally obligated to pay the taxes, plus should be the owner. Whoever is paying the taxes should be the owner and should be legally obligated to pay the taxes. Real estate taxes, if paid by the mortgage company, then it will be deductible when the mortgage company actually pays it to the IRS, right? So that is about real estate taxes. Next is personal property tax. So what do you mean by personal property tax, guys? This is nothing but your movable property on which you have paid the taxes. Taxes on your vehicle. Okay, that is also allowed in the name of personal property tax. On vehicle, over there what happens, we have to pay the taxes based on the some tire fees is there, something like just like RTO tax we have over here, right? Same way over there we have personal property tax based on each vehicle, the weight, right? Their weight, dimension, everything. The taxes are taken for each and every vehicle separately. So that vehicle taxes which you have paid, that is your personal property tax, will be allowed as a deduction on your Schedule A. Okay, so 3 deductions we have understood. Now the next one is most important. Here the people get confused usually. Income tax other than federal. Okay, other than federal means, see, federal taxes are not deductible at all. You are not going to take it as a deduction on Schedule A. But if you have paid the taxes for local or state, right, or sales tax, general sales tax, you can either take a deduction for general state sales tax or you can take a deduction for local and state tax, right? So any one of these two you can take it as a deduction, right? Next is you can deduct either local or sales tax, not both. It's mentioned over here. Okay, so this all types of taxes will be allowed only up to $10,000, not more than that. Okay, non-deductible are what? If you have paid federal taxes, it will not be deducted. If you have paid inheritance and gift tax, it is not deducted. Why? Why it is not deducted? We have already seen that at the time of acquiring the asset, at the time of acquiring the particular property, we used to reduce that gift tax proportionate amount. That's why it will not be separately deducted as a taxes, right? Third one is taxes related to the Schedule C. Schedule C, Schedule E related taxes will not be shown on Schedule A because they will be shown separately on the particular schedule. Let's say a rental property, real estate is there. Real estate taxes you have paid on a rental property, that will be shown on the Schedule E, not on A. That's why it is shown as non-deductible on Schedule A. Special assessment for the local benefit, it is not called as a tax, but it will be added to the cost of your property, right? Based on these two things, there can be one question from the taxes topic. Okay, so please read this thing carefully. Special assessment for the local benefit. Okay, even though it is paid to the government, but it won't be considered as a taxes. Sidewalks used only for own benefit. All these two things, if they are going to improve a particular property, they need to do some inspections, some assessments. For that, they might have paid certain inspection charges to the government. right? So that thing is not allowed as a deduction as a taxes. Next is HOA charges, fines and penalties, custom duties, employment taxes, tax on gasoline, car inspection, per capita taxes. All these taxes are not allowed as a deduction on the individual tax return at all. Okay, so just remember, you need to remember, see the list of non-deductible is very so like lengthy one. You can just remember what is deductible, rest all is non-deductible. Real estate tax is paid when paid or incurred, legally obligated to pay, plus owner should be the person who can take the deduction. Okay, real estate taxes is paid by the mortgage company. Third is personal property taxes, and fourth one is income tax, that is local, state or sales tax, not both, any one of them you can take. Okay, got it guys? Next is interest income, interest expense. It's simple. Whenever you are going to pay your interest expense for any home mortgage interest, it is allowed as a deduction. Okay, then we have a personal consumer interest. It will not be deductible. It has to be related to home mortgage, then it will be deductible on Schedule A. Education loan interest, right now we have seen that it will be deducted as adjustment to income. That's why below the line it won't be adjusted, it will be adjusted above the line only. Okay, so that's why it is mentioned here. Investment interest expense will be deducted only up to the amount of your investment interest income. We'll see that later on, I think in the same page, yes, right? Next is prepaid interest. If you have prepaid the interest amount, interest expense, that is not allowed. Again, the same thing in all the Schedule A items, it has to be incurred and paid in the same year. It should not be you're paid in advance and then it is accruing in the next year, or it's accruing in the current year and you are paying it in the next year. It should not be like that. Okay. Let's see one example. Home mortgage interest. Let's say the loan amount of whatever home you have purchased. See, before 2017, the rule was if you have taken a loan, in case of MFS 5 lakh, in case of MFJ it is 10 lakh. Okay, the loan limit was there. After 2017 to 2025, the loan limit is 7 lakh and 3,75,000. Okay, so let's see one example. The loan amount example is not mentioned over here. Okay, no worries, so we'll just read it. Loan amount should be 750 and 375 in case of MFS, because when you are getting this loan between 2017 to 2025, the limit has been changed. Okay, interest is more than $600, you are going to receive a 1098. Loan amount should be spend money on second home. See, this green colored means it has been added in 22 only, means there is a possibility they can ask a question based on the second home. Initially the second home was not a condition to buy the second home if you're taking a mortgage, and that mortgage interest is allowed. But right now, after 2022, in 2022 tax year, spending money on the second home is allowed. This condition is no more applicable on 22. Earlier it was applicable. In 22 it was not, it's not now applicable. Got it guys? If you're confused, I'll just make one example. There is one home you are already having one home. Now to buy the another home, you took a loan, home mortgage, and this home is mortgaged, and for this the bank is issuing you 1098. You cannot take this 1098 as a deduction on Schedule A. This condition was before 22, it was applicable, that it was applicable. Okay, it can be extension of existing home. Any points paid allowed as a interest expense. Okay, any points which you are paying will be allowed as an interest expense only for main home, not for the second home. Home mortgage and interest loan in business or travel, home equity indebtedness, interest element, not allowed. Okay, because business related or anything is there, it will be allowed in your Schedule C, not over here. Qualified mortgage insurance premium allowed as an interest expense, but it will be phased out. It will be phased out if your AGI is up to 1 lakh, then it is allowed. Okay, and if the AGI is more than 1 lakh, then it will be phased out by 10% for each 1000 increase if it's a MFJ, and for MFS just divided by 2 means here 50,000 and here 500. Got it guys? Just remember this topic is important because there were some changes in 2022 tax year, so please read this interest expense topic in detail from the regular book also. Okay, next is investment interest expense. For this we have seen this chart in I think class also, that when you are going to invest with a fund banker is going to invest further. So when the investment gives the income, back to the fund banker. The fund banker will reduce certain expense, certain commission charges, and deposit the remaining amount to the taxpayer. Okay, so this amount which is getting deducted, right, the expense will be allowed for you as a deduction only up to the maximum amount of income which you are earning. Okay, allowed only to the extent of the investment income earned. If interest income is a tax exempt, no expense will be allowed as a deduction. See, this interest, let's say this interest is a municipal bond interest, then this expense will not be allowed. It has to be a taxable income, interest income, then only it will be allowed as a deduction. Got it, guys? Next is charitable contribution. Here you have to check first the second table. I'll start from here. Okay, whenever you're going to do some charitable donation to a particular organization, first thing you have to check that whether it falls under the 50% limit organization or other than 50% limit organization. If it is falling under 50% limit organization, they will have a higher benefits. Means if I am donating a cash and the person whom I am donating, okay, the organization is falling under the 50% limit. Right now you don't have to remember what is 50%, what is other than 50. It will be mentioned in the exam question itself. Okay, because there is a lot of list of 500 organizations given by the IRS. You can visit on the IRS site and check what are 50% and other than 50%. Okay, when you're working practically, you have to check that whether it is for this person or for this, and based on that you need to add, you need to enter the amount. Okay, so for our current exam purpose, you don't have to understand what are the meaning of these two terminologies. Right now just understand, when you are donating a cash, 100% of AGI is the limit. Means maximum whatever you are donating, it will be allowed as a deduction up to 100% of AGI. Here word AGI is there, guys. Okay, other than 50% is, guys, I think here there is some changes now. 60% of AGI will be there. Wait, here 60% of AGI is there. Okay, 60% of AGI is there, and for other than 50% of organization, 30% of AGI is there. Okay, now the main important thing is over here, ordinary income property. Okay, so if you are providing some ordinary income property, means that a property is going to earn certain income in future year also. Take FMV or cost, whichever is lower, as a donation amount. Okay, whichever is lower will be considered as a donation amount, but this donation will be limited to 50% of AGI or 30% of AGI. Here 60%, here 50%, 30%, 30%. Okay. Now the main crux is these two things. I know there was a little bit confusion in these two things, but if you guys remember our capital gain topic, if you gifted a property, if you gifted a property, do you remember there were two kinds? One was appreciated property and one was depreciated property. If you gifted a depreciated property, what will be the cost basis for this property? That was depending that at the time of sale, at what cost you are selling it, right? Depreciated property means what? The cost basis is higher than the FMV. Okay, so at the time of sale, you will check that where you are selling this property, means whatever the organization, I have donated the property to the organization is going to sell it further in the market. So at what price the organization is selling it in the market, whether it is selling at less than FMV, between FMV and cost, or more than FMV. Do you remember this one concept is there in the gains and losses topic? Over there, when you sell it less than FMV, the cost basis will be FMV. When you sell it more than cost basis, the cost basis will be the cost basis. So this is what it is saying. Capital gain property at cost means when it is sold at more than the cost basis, this cost was considered as a adjusted basis while calculating the capital gain. If you remember that topic, this is linked to that. Okay, so capital gain at property at cost or capital gain property at FMV, these two things you need to check, and based on that, whatever organization you are giving the this property as a donation, you will see that either 50% of AGI or 30% of AGI you will be considering as a charitable donation. Okay, and other than 50% limit organization, it will be 30% and 20%. whatever amount which you are not able to take as a deduction will get carried forward for the next 5 years. You have to remember this percentage. There is no exception that you can skip this topic. It is important topic. At least one question can be asked from this topic. Okay, so let's see the theory part. Qualified organization can be any church, association of church, temples, or other religious related organization. Non-profit charitable organization like Red Cross or United Ways, all these types of organization who work for a non-profit purpose. Okay, non-profit educational organizations, non-profit hospitals and medical research, utility company, emergency energy program, if that company is an agent of a charitable organization. Okay, non-profit volunteer fire companies, public parks and recreational facilities, civil defense organizations. So all these are called as your qualified organization. So whenever you see in an exam, whenever any of these words are highlighted, directly take from the chart the first limit, that is 50% limit organization, because these are all qualified organization. Okay. Non-deductible contribution, if provided time or services, instead of providing a cash or some clothes, food, books or any property, instead of providing a cash or other than cash thing, you provided certain services. Let's say on every Sunday, if a taxpayer is going to certain church and providing his services over there, okay, so he is not providing any cash or in kind, so you cannot take that deduction of service amount, the FMV of the service, in as a charitable contribution. Okay, that is a non-deductible contribution. Contribution of less than the entire interest of property means whenever you are contributing, still you are owning a certain percentage of that property, and that percentage, the right which you are owning right now, is higher that from that which you have contributed. Okay, contribution of less than the entire interest of property, you have contributed certain small part, that much you cannot take it as a deduction on your tax return. Okay, next is contribution to specific individuals, needy people, member of clergy, hospital of a specific patients, that is not allowed. Specific to that person the donation should go, that is not allowed. It has to be a organization, it has to be the organization who is going to serve it further to the needy people. Okay, got it guys? Next is contribution to a non-qualified organization, that can be a political organization or candidates who are standing in the for election or something. For them, if you are going to contribute, that is non-deductible contribution. Okay, other points of consideration which you need to understand is, if contribution is the donation which you are going to give is more than $250, then you are going to receive a receipt, an acknowledgement from that organization that this much amount you have donated. Cost of providing services will be deductible. Just a minute, guys. Non-deductible. Okay, if you are providing the contribution by way of time or services, it will not be deductible. Cost of providing the services will be deductible. Means what? Along with this, you are also providing certain facilities like in kind. In kind, if you are providing certain donation, let's say I am traveling from one place to another place, right? But during the traveling I am expensing the travel cost, the travel expense. So that is the extra cost for providing my services, for providing the donation. Did you get it what I'm trying to say? But in the form of your own services, it cannot be called as a contribution. Okay, this is just traveling from one place to another, or to provide that particular donation you need to incur certain cost. Okay, so cost of providing service, here the meaning is different. Don't get confused between the point which is mentioned over here and here. Okay, overstated, if you overstate your donations on schedule A, you will have to pay a penalty of 50%. Okay, and this point has been removed in 2022 tax year, that the standard deduction is allowed even if you have a charitable donation or not. The standard, they were taking a deduction of $600 or $300. Okay, but this thing is now not allowed. Next is limits on charitable deduction, types of property. If it's a cash, 50% limit organization you can do, that is your this churches, medical research, education institution, publicly supported charities. And second is other than 50%. What are the things you can donate is ordinary property, means that is also going to generate income in for future years. And the third one is capital gain property. right? I have held it for more than 1 year. It's a long-term capital gain property. Now I am transferring the whole property for the use of some medical research activity, for example. Okay, so that is a 50% limit organization. I'll see that whether they are opting for, whether I am opting for a capital gain property at cost or at FMV. What is the cost basis which will be taken at the time of sales? Based on that, 50% and 30% will be charged as a limit for charitable donation. Okay, so that was about the charitable deduction. Next is casualty and theft loss. Casualty and theft loss for a federally declared disaster will be allowed. The criteria for claiming the loss is simple. Loss have to be sudden and unexpected. Personal property loss are, I just removed this point actually for now, because personal property losses are also allowed. Means if you have a laptop, if you have any movable property, personal property means any movable property. Okay, if you have a vehicle, a car, all those things are also allowed for casualty and theft loss. Okay. Next is, if no insurance or not filed any claim, then the deduction for the casualty theft loss will not be allowed. Okay, increased standard deduction is allowed if the loss is more than 500. So $500, up to $500 is the standard deduction that will be allowed on your first page along with the standard deduction. Okay. Next is form 4684 will be considered, will be used for mentioning that how much loss have you incurred due to casualty and theft loss, and this casualty and theft loss has to be federally declared by the government as a federally declared disaster. Okay, now this calculation you have to understand, you have to keep this calculation in mind. Okay, while solving the question in the exam, this calculation will help. Okay, FMV before loss, take the FMV of the property before loss minus FMV after loss. Means, can I say like the scrap value or whatever is the FMV, now it is left. So this is my decrease in FMV, this is my reduction in FMV. You have to compare it with the adjusted basis of the property immediately before the loss. Before the loss, what was my adjusted basis? Means, can I say if loss would have not occurred, at what price I would have sold this particular property in the market? Let's say my laptop has been lost due to a certain flood. Okay, so what is the FMV before the loss? I'll compare it FMV after loss. Okay, so whatever is the decrease in FMV, I'll compare it with the adjusted basis. What was the adjusted basis of my laptop? I'll just see whatever is the lower, that amount I'll consider. Against that, how much insurance claim I have received. See, if I have received the insurance claim, then only I will be able to take this casualty and theft loss as a deduction, right? So you are going to reduce that much insurance claim recovery which you have received. The remaining amount is the taxpayer's loss. Now this loss will be allowed an extra deduction of $100 per loss or $500 if it's a major disaster. The remaining amount, okay, after reducing this $100 or $500, the remaining amount will be allowed as a deduction. But now this deduction will again be limited to 10% of AGI, and whatever is the remaining, this will be allowed. Okay, so there are twice deductions which are being taken from whatever is your taxpayer's loss. Taxpayer's loss minus $100. After that, you are going to again reduce the 10% of AGI. Okay, whatever is the remaining will be the allowed amount as a deduction loss. Okay, now this was one example. If you guys remember, in class we have seen for charitable contribution, if we have cash, if we have non-cash charitable contribution, or there was one unique thing, like I can say 50% limit organization also you are donating. You are also donating to other than 50% organization. Then how you are going to check is, let's say your AGI is just 1 lakh. Okay, you are donating to a 50% organization, that is cash, and you are donating 40,000. So can I say this whole 40,000 I can take as a deduction? Because if I donate a cash to a 50% organization, what is my limit? It is 60,000, right? 60% of my AGI. So can I say 60,000, so I have taken the deduction? Okay. Then next, what you are going to see is what you are donating. Let's say I am donating to a organization who is other than 50% organization. Okay. So whatever is the amount which I am going to deduct is here is, let's say 50% deduction I am going to get. Okay. So let's say I am also donating a stock Stock is what? My ordinary income property, means you are going to earn a certain income in the upcoming years, and that stock has been deducted to a 50% organization. Okay, cash and in-kind property is donated to 50%, 50% organization. So here the limit is what? 50% of my AGI. So 1 lakh into 50%. So can I take whole 60,000 plus whole 50,000 out of this 1 lakh? Can I take whole 110,000 donation? No. Here the limit will be restricted to whichever is higher, that is either 50 or 60. What is higher one? That is 60%. Right? So maximum donation I can take is 60,000. Out of that, for cash I can take whole 100, like that is 40,000, and remaining 20,000 donation I can take for this 35,000 which I have donated. Right? For this 35,000 which I have donated, I can take 20,000 in current year. So remaining 15,000 I can carry it forward for the next 5 years. Do you remember this example? If you are going to donate a cash and in kind, then whatever is the highest one, 60 or 50, you will take it as a maximum deduction for both. Right? So maximum I can deduct the charitable donation as 60,000. So this 60,000 first will be allocated to the cash, that is 40,000, and the remaining will be allocated to the non-cash, that is 20,000. Same thing we have seen that if instead of this 50% property, instead of 50% organization, if this is a other than 50% organization, then what you are going to do is you are going to check, you are going to apply the same rule. Okay, whether you are donating a cash, let's say you are donating a cash to a 50% organization for 40,000. Okay, no, let's say it's an ordinary income property. Here in this example we took the ordinary income property, right, for a 50% organization. So ordinary income property, if it is donated to 50% organization, what is the limit for that? Ordinary income property, if it is donated to 50% organization, the limit is 50% of AGI. So can I say I can take a deduction of 50,000 even though I have just donated, sorry guys, even though I have just donated 40,000, I have the limit of 50,000 which I can take, right? So let's see what other donation I have made. Let's see, I have made a donation of a capital gain property at FMV which is having a deduction of 30%, right? And I have donated 35,000. So can I say I can take only 30,000 as a deduction for the second donation which I have made? Right? So first of all, you, whenever there are two types of donation, check whatever is the highest limit. Highest limit is what? 50,000, 50%. So maximum 50,000 I can take. Out of that, you are going to reduce this 30,000. First, give preference to 50% organization. Always and always. See here, actually that example I have not taken, but remember two things. First, whichever is highest deduction, that is your main limit. I can say this is your whole box, this is your main limit, which will be your 50%. Okay, out of that you are going to just remove whatever is allowed for 50% eligible organization. Now whatever is remaining, you will be taking it for other than 50% organization. This complex topics, these complex questions will not be asked in exam, but I know in many of the MCQs this type of concepts are given. Please try to solve it in this manner. Step 1, whichever is higher, means maximum 50,000 I can take, right? Here the limit is enough for me to take the 40,000 as a deduction, right? But here the limit is not enough. We have 35,000 as a deduction, but we need 30,000. So reduce this 30,000 over here, okay, and remaining 20,000 will take it for the ordinary income property. Always give preference to the cash. Always give preference to the 50% limit organization. Okay, next is, okay, so now most important is 199A, qualified business income deduction. This topic we have done very well in the class. I hope you guys remember the topic, the limits, the deductions, how much which we are going to take. First one is effective date of this particular topic, this particular deduction is 1/1/2018. From 1/1/2018, the qualified business income deduction was allowed. What is the amount of deduction that can be taken is 20% of the qualified business income, and it is allowed only for sole proprietor, partnership and escort. Right? Calculation of the qualified business income. What do you mean by qualified business income? Qualified business income is your income minus deductions. all qualified business income minus deductions. There can be two scenarios. One can be your QTB, one can be your SSTB. What do you mean by QTB? Qualified trade or business. Example is shoemaker or manufacturer, okay, where the product is important, not the person who is making it, right? But SSTB is what? Specified trade or business, where the person's skills are important. Doctors are there, preparers are there, you know, CPA is there. The main skill of that person is important. That is called SSTB, right? What was the calculation? First step we were going to do is 20% of the QBI. QBI is what? Qualified business income. Okay, directly take 20% of QBI. And step 3 is take step 2 or 20% of the taxable income. Here the taxable income will exclude your capital gain. Exclude your capital gain while calculating the taxable income into 20%. Okay, first step is 20% of QBI. Third step is 20% of taxable income. This taxable income will exclude the capital gain. I'm not going to explain you the examples, no guys. I hope this example we have already done. I'll just tell you how to calculate the limits, okay? And I think in our regular class I have taught from the same PDF, okay? So again and again I'm not going to repeat the same things. For other people, particularly for this topic, particularly for QTB topic, I'll just upload that much video from our regular batch, okay, for QTB and SSTB. I think it is already uploaded. Please check. In our part 1 playlist it is already uploaded, the QTB topic. Okay, so just go through it. I'll just explain it in a very rapid revision manner. Second is individual limit criteria. Means what? We are going to check that whether your taxable income is falling under this amount, is falling above our phase out limit. You don't have to remember the phase out limit. You just can check the calculation how it is done. If it is falling below the phase out limit, then take whole 20% as a QBI deduction. If it is falling above that phase out limit, means I'm talking about the second step, okay? The second step answer will be based on two things. One is whether your wage income is up to your QBI, right? QBID is higher of 50% of W2 or 25% of the wages plus 2.5% of unadjusted base of qualified income. Whichever is higher you are going to take. If this thing is true, means wage income is wage expense, sorry, being an employer you are going to pay to the employees. So your wage expense, if it is up to your qualified business income, okay, then you are going to check that the third step will be, what will be third step? 50% of your wage expense which you are paying to the employees, or 25% plus 2.5% of unadjusted basis of the qualified property. Property which you have entered while entering into the business, whatever property expenses which you have incurred is your unadjusted basis. Just take the cost basis. Do not add or reduce anything for the depreciation or additions, okay? Whichever is higher you are going to take it as a step 3. Now, what if your wages expenses are more than the qualified business income? Simply your QBID will be 20% of QBI, means your first step and second step will be same, okay? Next is what if, now here the phase in, phase out limits will be applicable if your taxable income falls between these two phase out limits, okay? So in that case, what will happen? You have to do this whole calculation. Okay, in detail the whole calculation is already there on the YouTube channel. Please go through that video. I'm not wasting that time again for revising this, okay? Only for QTB, please refer that another video. All right, some people have left to watch that video. Next is SSTB. SSTB is simple, that all the calculation which we have seen over here will be the same thing over here. Same formula is there, 20% is there. Only the amount which will be differ will be between, if your income is, taxable income is falling between these two categories, these two phase out limits, right? Then the formula will get changed. Okay, this whole video is already there. Please go through. I'm not going to repeat again and again the same thing which is already available on the YouTube. Okay, credit for prior year minimum taxes paid reduces the present year tax liability. Let's say AMT, this is about AMT paid last year is 4,000 and current year your regular income tax is 60,000 and tentative minimum tax is 57,000. So can I say you can pay you will have to pay whichever is higher, whether your regular or your tentative, whichever is higher, you'll have to pay it. Means you will have to pay 70,000. But since you are already having a credit of 4,000, you can apply this credit over here. But you cannot reduce your regular income tax below the tentative minimum tax. Means you can take maximum credit of 3,000 in current year. 60k minus 3k will come to 57k. Minimum 57k you will have to pay. So taxpayer need to pay mandatory minimum 57,000. Therefore, the credit allowed will be 3,000 as a minimum credit and not as a 4,000. Okay, this we have done in the class already. Okay, so next topic is about gain and losses. We'll keep our session till here only because it has been 2:30 right now, and I think it will be a little bit heavy for today. So please make sure you solve all the MCQs from the previous topics which we have done, from topic 1 to gross income, filing status, gross income, income exclusion, adjustments to income, all those topic, and this deduction, standard deduction, itemized deduction. Okay, and after completion of this, do not just stop reading, just go to my YouTube channel and watch the QTB and SSTB video. Okay, this whole example is explained over there, so that's why I'm ending it right now over here. Please do it right now only after the completion of this session. This gains and losses, we still have 2 more days, so I'll just need 1 day for the gains and losses. So this I'll cover it on Monday, and on Tuesday we'll cover with the gift tax, descendant, and all the topics which are remaining. I don't think only the taxes related topic will be left after this. Let me see. Yeah, this whole will be done on 1 day. Tomorrow we'll do it. Gains and losses. Yeah, the taxes topic is simple. It will be covered after I complete the specialized return topic. Okay. So I hope those who have ordered the books have already received it. Those who have not, if not received, please connect with me. Okay. So that's it for the day, guys. Have a nice day.